Well, Wolf, if you look at versus a week ago, we're about the same place. Actually, as of a couple of days ago, while the S&P was making a new high, none of the sectors were. So the market is just kind of digesting the gains from November, with the addition of the Russell 2000, which is playing a significant game of catch-up on this theory of excess liquidity, not theory, the reality of excess liquidity, coupled with a synchronized global recovery. And now it's being accepted and driving those laggard at cyclical and more economically sensitive areas higher.
Nancy, what are you doing in the final weeks of the year as we've seen this tremendous run up and now a few days of a pullback? It was only 1.5% over the last 4 days. Where does that leave you?
Well, we run pretty fully invested all the time, Sarah, so we have been trimming our winners. It's nothing super original, and adding to names that we've wanted to own for a while. But generally speaking, we're pretty optimistic midterm. Short term, I think we'll see a pullback sometime in the first of the year, maybe before that, and then we'll be much more aggressive about going in and adding to the higher quality names, just like we did in March and April of this year.
Let's talk Apple. It is leading the Dow today. That stock rallying. There's the NASDAQ up 1%, but Apple has been the biggest winner in the Dow on the back of some reports that the company is set to ramp up iPhone production by 30% in the first half of the year. The report says that Apple is also planning to increase production of its high-end computers like the MacBook Pro. The stock is up almost 5%. Nancy, comes off of a Nikkei report. I'm not sure how many of these reports actually turn out to be true, but it does tell you something that the stock is having such a sharp reaction. What's your optimism level on Apple in this cycle that it's going through?
Well, as you know, we're long-term shareholders. We were buying the stock at a 9 multiple and a yield above the 10-year when that actually meant something. And we've been net sellers in the last year. We reduced our position by about 30% overall, and that was just due to stock appreciation and then actually reducing our holdings. At this level, I think, the stock's been meandering for about 3 months, and I think the news is even more than the iPhone production. They're just doing a lot of things right. And the new fitness app, you mentioned the Mac Pro, iPads were left for dead, 2 years ago and have really had robust returns. So, with new money, we're putting money to work there, but we haven't increased our allocation to the holdings. I'd like to see the fundamentals catch up with the stock price, which is now trading at 32 times next year.
Tony, Apple and the other big cap tech winners of the year, do you think they're more due of a pullback than the broader indices?
I think they already have, Wolf. If you took a look at a 6-month chart of Apple, it's well below where it was. I think 7% below where it was at the August peak. And I think that's a really important point. So even Apple is playing a little bit of catch up here. And I'm with Nancy between the excessive optimism. I mean, it is really incredible, some of the optimism that's out there, and this rush to catch those, the stocks that haven't participated as well. We're due for an early year pause in the upside, but I believe rather than fear it, because of that excess liquidity and that global recovery, I think we'll be able to attack it.
Shepard Smith here. Thanks for watching CNBC on YouTube.